So we want to thank all of our members and followers as well. So like Shade mentioned, we're going to talk about Texas tax sales, and what we're going to do is we're going to go look at one property online, but we're going to go over a bunch of different properties that have sold within the last couple of weeks. So these were from the February auction. Shay just went through and looked at some random counties and picked out some of the different sales that were taking place and looked at some of the results. And we are seeing better results in Texas. We're seeing good results, and we've seen good results in Washington. We've seen even good results in Florida. So it's a great time to be buying tax sale properties.
Yeah, now Texas is an interesting state for investing opportunities. It's kind of like Florida in that way. There are interesting opportunities there, strong real estate market. Now, there's a lot of counties in Texas, 254 counties, which is actually one of the things that makes it a little bit difficult, because the majority of Texas has always operated on live auctions, live in-person auctions. And so it's only been in the last few years that there have been any kind of online opportunities at all. So this is something that's brand new. Now, even within Texas, I don't know, there are lots of counties that wouldn't necessarily have people driving out from long distances to attend their tax sales. Every county basically is holding their own sales, and they all hold them by law on the same day. So even if you wanted to participate in multiple auctions throughout the state, you couldn't do it. You'd have to basically probably focus on one sale you could participate in. So challenging to do, but online, that's possible now. Online, you can participate in multiple sales in Texas, and that's no problem at all. Now, Texas itself is what we classify as a redemption deed state, which means that it is sold like a tax deed, but there is a redemption period attached to the property after purchase, depending on the property type. It's 6 months for most properties, where you're not going to be able to sell the property, and where it has the potential to redeem, which if it does, you get paid a good flat percentage on your money. In fact, in Texas, it's 25% flat if it redeems any time. And 2 years on homestead properties, and that's basically 25% per year. So they treat that as a flat rate of return. But that added redemption period also brings down, what people are willing to pay for these properties, even though the redemption period in many cases can be very short. The redemption period actually begins at the time of foreclosure, which sometimes has happened a little while before these properties have come up in the sale. And so a lot of times, you're working off of a redemption period that's already been ticking away before the auction even took place.
Yeah, exactly. 90% of the properties that we're going to bid on are going to have a 6-month redemption period. And like Shade said, the redemption period starts at the foreclosure when it was foreclosed on by the court. So that's usually 2 to 3 months before the auction even takes place. So in that case, you're only going to have to wait 2 to 3 months in most of the properties. You also have ownership rights during the redemption period. So you could rent the property, you could live in the property. You just don't want to put a whole lot of capital into it, rehabbing it until that redemption period is passed. Now, the way that Texas handles their auction is they use what's called a premium bid system or method, meaning they bid up the price like any other kind of auction. If you were to go to eBay and the item started at 99 cents, whoever wins the auction, let's say it was $100, that would be the high bid. That's the same thing. Now, usually that opening bid is going to start at the delinquent taxes. That's the reason why you see cheaper properties starting at maybe $1,000, and you'll see more expensive properties starting at $20,000 or $50,000. It's going to depend on what were the property taxes within that particular property. That'll depend the opening bid amount.
Yeah. Now, like we were saying, for the longest time, Texas has held their auctions as live sales. But starting a little while ago, they had live online auctions had started, and I would guess that maybe there's 20 or so counties, 25 counties maybe, that are doing online auctions. Most of them are all with the same company, with Real Auctions. So what we did, we went into Real Auctions, started looking at the Texas sales, starting with Atascosa County, and working our way down, just looking at the different sales for which counties. Some counties didn't have sales in February. They only hold auctions as often as they need to. But if they do need to hold an auction, they're going to do it on the first Tuesday of every month. Same as Georgia, actually. They both have this similar laws that way, so they hold their sales actually on the same days. But while they hold the sale on the same day, these online auctions are quite a bit easier here to participate in, but they're still creating some pretty good opportunities and deals. And here's what we mean. So here's kind of an interesting property that came up for sale. We can see that it had a minimum bid amount of 43,000, and it appears to be a commercial property. It's a pretty large property, and it's on kind of a traditional Main Street downtown area there. It's actually next to this city building. And I don't know if it was some kind of a bar or a club or something like that. It kind of looks like that. For all we know, it could be a church. Who knows? But it bid up to only 75,000 and has a judged value from the county of 708,000. So they just got it for a very low percentage of value. Didn't bid that aggressively for a property that has a fair amount of value.
Yeah, exactly. I mean, this is a property that sold for around 10% of the property's value. And so with a property like this, there's a lot of different things you could do with it. I mean, if you wanted to open it up, you could put, you could open it up and put windows in it. It could be converted to office space. There's a lot of things you could do with it. It would really depend on this individual market. But when you're acquiring commercial property for 10 cents on the dollar, you picked it up for such a good price, and this is already going to have only a 6-month redemption period. So in 2 or 3 months, they're going to have full ownership of this property, and they bought it for only 10 cents on the dollar.
Yeah, that's hard to beat anywhere you go. 10 cents on the dollar is going to be excellent numbers and make it very easy for you to sell. But there's lots of properties here that sold. Let's look at another one here. So this property here was a single family home that sold for, it opened up for 35,000, sold for 82,000. But looking at it, it's actually valued at about 209,000. They picked up it for about 39% of value. It's also relatively new though, so if you look at it, it's built in 1998. Sits on a half acre of land, so it's a newer house they got for under 40% of bid to value ratio, which that is pretty remarkable. That's a great deal, because oftentimes a property needs to be newer or give us some reason in order to pay a higher percentage for it, and in this case, it would be a justifiable percentage.
Yeah, it was built in 1998. One thing that's interesting as well is they don't have the bedrooms there, which will actually hurt the value on their estimate. So in looking at comparables, we might find this property is even higher value than 209,000. Maybe it's 230,000. Once we determine it's a 3-bedroom, 2-bath on a half-acre lot built in the late 90s, really we may have bought this, or they may have bought this property for 35 cents on the dollar or 30 cents on the dollar, once it's fixed up and rehabbed and resold.
Now, in addition to deals on homes, there were also some great deals on land purchases. Land purchases like this one right here. So this opened up at 16,000, has an adjudged value of 200,000, and it sold for just 30,000. So it didn't bid up that high. It essentially sold for 15% of the estimated or the adjudged value by the county, which is not very much. The property has gone up in value. It's also it's naturally landscaped. It hasn't been cleared yet. You can see the lot just to the right of it, has been cleared for farming, but this one hasn't been cleared yet. And so it's a good deal. Anytime you can get property at this low of a price. I think this was 10 acres total too. So they didn't pay that much per acre, on it, but the value on it is really solid.
Yeah, absolutely. Well, and we just did a webinar with our membership about, investing in land and what to watch for. And this would be a good example of a property that we would check into the deed. We're going to do that anyway through our 3 stages of due diligence. But in that case, we'd want to check and make sure that we do have legal access to it. And it does look like that there's a paper road accessing the property, and I would imagine that there may be some easements as well that would allow us access to it. But that would be an example of additional research that we would do before buying it. But if that is the case, they really did good with this. And we can also see that this property has been jumping up in value, which means that for whatever reason, land within this area is selling. The county's not going to automatically just jump up the value like that over nothing. It's because properties are selling for all-time highs within that area over the last 10 years.
Yeah, I mean, it's remarkable for it to go. I mean, if you think about it, it basically went from 36,000 in 2020, to 200,000 by 2025, which was crazy. Crazy numbers there. But also, though, that's one way you make a lot of money is to own property in a place like this. If you pick up the property, you get in, well, on that $30,000 level, you're going to make your money tenfold when it increases in value like that. Yeah, there are some additional deals here. This was one of my favorites I found here in looking at some sales. So this property had a minimum bid of 14,000, had an adjudged value of 261, and it sold for 101,000. If we take a look at some of the things, this property was built in 2015. This thing is practically new. It's only 10 years old. And it sold for 40. In fact, it sold at 42% of value at 239. At 261, it's probably more like 40% of value or less. To be able to get a property this new at that low of a bid to value ratio is crazy. Because this property probably isn't going to need much of anything in order to be usable and nice. Not going to have to do some kind of major work on it, most likely. But you picked it up for such a low percentage of value, you could certainly afford to, if you wanted to. This would be a great property, to either flip just for, making good money on it, or this would also work as a tremendous property if you wanted to hang on to it for rental. This property would probably bring in quite the monthly income. Annual income with a property like this would be impressive. Plus, it's going up in value like crazy. I'd hate to pull out of this property right here right before it jumps up to 400,000.
Yeah, yeah, definitely a great deal. And when we talk about paying up for property, usually we're trying to get homes for 20 cents to 35 cents on the dollar, depending on the condition. But when we're getting into homes that are this new, like Shay talked about, I mean, even if we have to go in there and repaint and add new carpet and that kind of stuff, that's going to be minimal compared to the type of profit that we can make on a property. So it's worth it to pay 42 cents on the dollar, and that's probably being conservative with the value. Once we looked at some of the rehab similar properties, we may see that it's worth a little bit more. That's the reason why in stage 3 due diligence we always talk about going and doing a full comparative market analysis. But there, we want to get exactly what that value is so that we can determine what our profit margins are going to be. But yeah, like Shade said, at that price, definitely worth paying up for it, because you're in a new neighborhood in a market that's selling well.
Oh, these are the sweetest deals in the tax sale market. Yeah, and that's because they are, the closest thing to like regular real estate. The prices are, incredible. It's hard to, prices here just amaze me. At 100,000 on this property, it is, it was a steal, an absolute steal, because again, new construction, it's not going to need a lot of work. So yeah, anytime you see properties like this, they are just remarkable. And this person got a great deal. And yeah, this sold just February 3rd, so a week ago. A week ago is when this was purchased. Yeah, another property here. This one's it opened up for 38,000. County judges the value at 198. Bidder paid 78,000 for it. I think its estimated value is about 233. It was built in 1982, so it's an older house, but it's not that old. It's not old like lots of other parts of the country. It wasn't built in the 1800s. It's not an old house. So a relatively new house here, and they picked it up for a pretty good low percentage of value here at about 33% of value. There's plenty of room to do whatever they want with it.
Yeah, exactly. And would probably pay between 25 to 35 cents on the dollar for this type of property. The fact that it was built in the 80s adds value, means that we're not going to have to worry about lead-based paint and old plumbing. And I mean, at least it's somewhat more, it's more modern. And so overall, not a bad deal. Probably going to do pretty well on it. And even if you dumped in, 40 or 50,000 into it, you could still make $100,000 on this deal. You're not always going to be able to buy the best properties for 10 cents on the dollar. When we talk about tax sale investing, usually we're trying to get homes for under 50 cents on the dollar, and that 50 cents have to be the most valuable and the nicest homes. but that's still the cheapest way that you're ever going to be able to acquire real estate. And there is lots of real estate out there that we can get for 10 cents on the dollar. But when we're talking about nice homes in competitive markets, if we can get them for 30 to 40 cents on the dollar, we're going to consider it a home run, because there's still a ton of profit to be made as long as we've gone through and done our due diligence.
Yeah, absolutely. In fact, like Steve was saying, there are situations where it could make sense to pay up to 50% on a property. There may be situations where you could pay potentially more than that. I suppose if there's enough profitability on it, it could make sense to do it. But a lot of times you're not necessarily going to have to. Like in this case here, where we have a property that is valued at 562,000. Which again, it's crazy that these properties come up for the auction at all. But here this property was built in 2012, so this is a very new property. It opened up for 49,000, and it sold for 260,000. Which is about 46% of its estimated value. Which again, that 46%, it didn't sell for cheap, but it absolutely justifies the value there with a property like this, because it's not going to need anything. It's a desirable property there. It has ocean access, deep water ocean access for people that want to have a boat or something there. It is an excellent property with great profit potential. I mean, this is the kind of property that the buyer could potentially make $300,000 on if they just want to turn around and flip it or just sell it. There's lots of profitability in it with whatever they choose to do.
Yeah, it's a great property on the water. We've got interior photos. Now, these aren't going to be current, but we can look back and say, oh, this sold in 3 years ago. Here are photos from when it sold last. We get an idea of what the interior looked like at the time. And even if you were to put in 50,000, you could still make 250,000. Even if you were put in 100,000, I mean, I don't think you'd need that type of rehab, but let's say that you needed to do a lot of things on it. In that case, you're still making over $200,000 on one deal a year. You do 4 deals like that a year, you're making some pretty good money in tax sale investing. Now, not everyone can start out with a property like this, and that's the reason we teach about buying land and looking at cheaper property and then start building up your capital. But eventually we want to get our membership and our members up to this type of level, because you can do less deals a year and make a lot more money. Now, you're going to pay a higher price for them, but you can also make more money in the end, even if you're not getting it as cheap. I'd rather do 1 deal a year and make $250,000 profit and buying the property at 46% of value than doing 100 deals that I picked up at 10 cents on the dollar.
Yeah, in fact, even if, so let's say that with this buyer, let's say the property redeems next month, okay? Which, I mean, if it's going to redeem, I don't know if this one actually has a homestead exemption on it or not. I'd have to look. But with the 260,000 that they paid, basically, in order to redeem the property, if they did it next month, then the buyer's going to get their money back, so they're going to get their 260,000 back plus a 25% flat money return on top of that. And so you're talking about they'd get $53,000 is what they would make on that for basically putting the money down for a month, for 2 months. That's the beauty of a flat penalty rate like that on these properties. And even if the property just redeems in a lot of cases, that's not necessarily a bad thing. The rate of return is high enough there that's pretty good. You can just get your money and just walk away. I mean, essentially with this, they would have made 50,000 on their money in a pretty short time period here, and they could go and reinvest into more properties. So there are more opportunities like this. In fact, we'll show another one here.
Yeah, I would say that probably 8 out of 10 of the properties, the homes, are not going to have homestead exemptions. Maybe it's a little higher than that in some areas and maybe lower in some areas, but usually 70-80% of the homes are not going to have. But we can look in and see if it does. But even in that scenario, you would have a 2-year redemption period, but you could essentially rent it out during that time frame if you wanted. You could rent it to the people that are living in it. You could do whatever you want with it during that period, and you'd make 25% for the first year, another 25% for the second year. So you'll make, essentially 50%. Here's another great example. This one was picked up started at a $24,000 bid, and you can see it bid it up to $204,000. So they ended up paying up for this property, but they were willing to because the year it was built, 2011. It's got a 3-car garage, and also this estimate here I think is low. And the reason is because we don't see the bedrooms attached to it. So if it has 3 bedrooms, 4 bedrooms, and really looking at the comps, if it doesn't have the bedroom information in there, it's generally going to docket some of the value. And so if we were looking at the range, maybe it's between 400,000 and 460,000. This property might be closer to the 460,000, which will even increase the profit margin more.
Well, yeah, and if you look at the neighborhood that it's in as well, it's in a really fancy high-end neighborhood where these homes are going to be worth $500,000 in no time. It's coming very quickly. Because I'm sure there's other areas around there where the property values are going up quickly. This would be a great place to own a property and just to continue to own it for at least the next 10 years. I think in terms of just the increases in value and what you could make on the property through something like just renting it out, there's a lot of potential money to be made on it. So, yeah, very awesome deal there. The more capital you have to work with, the more accessible some of the deals like that are going to become.
Yeah, well, in this case, maybe it wasn't a homestead property, so it made sense to pull it up because they knew they were going to have a pretty good chance of gaining ownership. Here's an example of the one that was picked up for about 10 cents on the dollar. I think kind of depending on the condition, it would still be a good deal. Now, in this case, maybe you're going to have to put $30,000 to rehabbing the property, but it's a small home, easy to rehab. And so if you were to put in 30,000, that would probably include a new roof. You could still make, $60,000, maybe more on this type of deal.
Yeah, which in all of these deals that we've looked at, these were all deals that occurred just a week ago, in online auctions in Texas. Which again, you might think the online auctions would be more competitive, but that's not what the results are suggesting. The results are suggesting, that there's less emotion tied to the bidding, and the investors are a little bit smarter, that the profits are higher, with online auctions than it seems like they are with live auctions. And so that works to our benefit, and certainly something that we want to take advantage of. Certainly these are far easier to participate in than any of the live sales. Difference between being able to participate in an online auction versus a live auction, there is no comparison. In terms of which one takes the most time and effort, attending a live sale takes way more effort than doing it online. Let's go over and take a look at some of these results here in one county. Okay, what we're looking at here, mentioned that there are maybe 20, 25 or so counties in Texas that are online auctions now. Galveston's one of them. And so we look here at the auction calendar, and the third was the first Tuesday of the month here. So we can click on this, and we can see the results here of these sales. And so we can see some of these properties were canceled for whatever reason. But here we can see a property that sold right here, for $140,000, and we can see that the adjudged value of the property there is $380,000. So just based on those numbers, they picked it up for a good percentage of value. Let's do this though. I can show you the images here of the property really quickly, because they can give you an idea of what the property is pretty quickly.
Yeah, exactly. In fact, we're going to be going through stage 1 due diligence here in a little bit, which is kind of the first steps that we go through in researching a property.
Yeah, so here we can see, if we're looking overhead, this is a nice subdivision that this property is located within. And if we go down there on a street level, I'm going to record that address right there. Let's go down to the street level. And this is from April of 2025. So not that old of an image, less than a year old. We can see, it's a beautiful neighborhood, very nice upper end neighborhood here. And appears to be a very nice property. They've got solar or something on it here. Lots of solar all over
Yeah,
on that property.
we're looking at photos that are, not too old. I mean, we would still get an on-site evaluation on the property, but these are from April 2025. We can see at that time, like Shade mentioned, the roof looks good. It looks like it's got solar. It looks like at that time it was occupied. Overall, a good home in good condition. And based on what they paid for it, I think they paid about 140. We can look into the market value and see what they think or what they're estimating it at.
Well, they say 325 here, but I think that's actually quite low here for it, because the county was, their judged value on it was 380, I think.
Yeah.
And so let's just see with Redfin, and they're at 329, which again, that I think that they're low, just because they're, the county's $50,000 over what Redfin and Zillow are saying, and my guess is that the county's not the one that's off on it. So I think the value probably is closer to the 380 here than what they're saying, which really just makes a tremendous amount of potential profit for the buyer. They've paid a very low percentage of value for this property at 140,000, and actually a similar situation to the one right below it. Here where they paid 101,000 for this property here that's valued at 261, which was another nice single family home.
Yeah, definitely. Well, and that's where, really looking into the market is going to determine that. We can determine exactly how much they paid. Even at 140,000, they probably still got it for around 40 cents on the dollar. And I think I agree with you. I'd be interested if there was a couple of properties that are pulling that down, or if there's consistent sales, because that was a 5-bedroom, 3-bath. I don't think all of those properties are going to have 5-bedroom, 3-bath, and have that many bedrooms. And so I'd be interested, but I think that I would imagine that it's going to be closer to the county as well. But that's the reason it's so important to check into the market value. And, in most cases, the assessed value is going to be lower than the market value. But occasionally a situation like this, that's where it requires that extra level of due diligence.
Yeah, and really just some tremendous results here from sales that occurred just recently. You can see that these are in some different cities, throughout Galveston County, but are still, very nice properties here. In fact, I'll pull this one, and people may recognize it. Here's one of the examples. Yes, so it is. You see, this one's another one that is in a really nice new neighborhood here. This is one of the new properties here. It's only 10 years old, and and this is it right here. We're looking at, this is from April of 2025. So same situation where it's the image is less than a year old. Property was clearly occupied here at the time. It is gorgeous neighborhood here. They live right across from the park here in the middle of it, and
Yeah.
you see
AC unit.
Yeah, AC unit. We see, somebody's clearly living here at the time.
Yeah, and what we'd get from the on-site evaluation is we'd see, is it still being occupied there? If the garage is gone, if the garbage can is gone, if there's no one living there, or if it looks like the grass, that can tell us something about it. If somebody's still living in it, that's going to tell us something about it. But we're always going to get an on-site evaluation before purchasing any type of structured property.
Yeah, and actually, so this property here, we can see the value at about 240,000. These are actually the interior images from when the property sold in 2021 for 225,000. And so, yeah, my guess is that this property value is potentially even a little bit low. It's probably valued a little bit higher, and it's certainly going to be on its way up. But we've got 32 photos here of the interior of the property, which is something you don't always get, and again, also with a new property as well. So yeah, for $100,000, that is one heck of a deal.
Yeah, and one additional step we might take with this property is it looks like it's in an HOA. So for any type of HOA properties, we're going to go ahead and contact the HOA, find a little bit more about it. Many times the HOA can tell us information that we wouldn't be able to find by any other source. You know, they may be able to say, oh, actually, you know, they moved out of there 6 months ago. They may, you know, the HOA is going to know about any issue because most of these HOAs get pretty involved, you know, and can be sometimes a bit of a pain. And so calling them beforehand and trying to get in good with them, especially if you're interested in bidding on a property like this, is going to make a big difference if you actually win the property. That way, you know everything that's involved with it. But,
Uh,
you know, picked up at 100 grand, that's a nice house. I mean, you can't get better than that at $100,000.
yeah, really, in both of those cases, you know, those are remarkable properties. They're both very new, and they were picked up for lower percentages of value, for like less than right about 40% of value or less, which is crazy for properties that are that new.
Yeah. So even if you pay 20% of it in rehab and quiet title cost, you know, you still have the chance to pick up 40% of the property's value and profit. You know, even if you can do 30% of the property's value, that's going to be over $100,000 in each one of these deals, you know, upwards of 150 to 200.
Yeah, so the
So,
deals are definitely out there, and they're happening, you know, right now. You just want to be you just need to get registered in some of these auctions with deposits placed, and get your research done so you can bid on some of these properties.